Good. Well, it's afternoon for me, maybe morning for others, evening for I guess everybody's watching this recording anyway, so it might be, who knows what time it might be. We'll just say hello, everyone, and welcome to the
No Name Podcast.
We still don't have a name. We'll call it Ben's podcast.
There we go.
How's that? We'll call it
Everything's
Ben's
always
podcast.
better with my name on it. It's all good.
Yeah.
Well,
So we have with us Spring, Chad, Ben, and the myth. What did I say?
Man,
I lost
legend?
it already.
I don't know.
The man, the myth, the
The
legend.
man, the myth, the legend. Jim Barron, welcome to our podcast, Jim. It's great to have you on.
Thank you. It's great to be on. I appreciate the honor of joining you.
Absolutely. And if you don't know, you're going to find out really quick that Jim has an incredible track record in selling option premium that goes back several years. We're going to get into Jim's story. We're going to get into how he got into this, his signals, the track record. It's impressive by anyone's standard. So you're going to want to stick around for that one. So we've got some names, apparently, that Jim has come up with. And we have not heard these names yet. So, Jim, lay it on us. What can we hear? What are we going to hear?
You know, I watched your first two podcasts and I thought, man, they have to come up with a name. So I thought, what am I going to do? And I was going to go to AI and ask for help, but I actually didn't. These are my own. You know, and I looked at other podcasts and say, well, what are they doing? And you know, some of them have pretty interesting names like All In. You guys probably see that one, but they're hard to remember. It takes me like 6 times of watching it to remember that. So, what are the easy ones there are to remember? But before I go there, so I did come up with one, and it ends up being 3 words. It's what I'm planning to name a future system or subscription-based system that I have in my mind, and it's called Profit Rocket.
Profit Rocket.
Profit Rocket, and Ryan, it's based on the compounding that you do, that because you make a profit, but the rocket part of it. So how did? But I thought for the podcast, the podcast itself isn't really the rocket. It's the fuel for the rocket. So I came up with Profit Rocket Fuel.
There you go. There you go.
But,
look at that.
I was waiting for something that was going to tickle your brain, and I didn't think that really tickle your brain, Ryan. So what are the other ones that I think of? Well, there's Tucker Carlson, there's Megyn Kelly, they are really easy. Joe Rogan, they're really easy to remember. I think this podcast should be called the Ryan Jones Podcast.
Of course, that'll tickle his ears.
Oh, sure. I was gonna suggest the Jim Barron podcast, but
no. I'm not on all the. I'm serious. I think the Ryan people. You've written a book. You've written books. Most anybody that I talk to of my subscribers, they all know Ryan Jones.
Well,
Ryan Jones.
So you have 12 subscribers. That's good. That's good stuff.
Yeah, I'm looking for 13.
Chad's coming on board, baby.
Getting the newsletter.
I think Ryan already blessed me with the name, so we're just run with that.
Ben's podcast. Yep. All
Sorry,
right. Well,
didn't mean to insult you, Ken.
No.
Insult him all day long. He needs it.
Clearly, we're not going to come up with a podcast name today, guys. So, what are we going to do? What are we going to talk about today? So, first of all, we do have the market update, which I'm just going to give you a little preview. Ben and I were right. All right. So, we'll talk a little bit about that. We have a TradeHound update that I think most of you will be very excited about. We're going to discuss a little bit about the Tesla cash flow covered call trade that we've been discussing. Just discuss it just a little bit and not a whole lot. We might get into that again at some point in the future. Then this government shutdown just keeps rolling on, and what it means for the markets. Then we're going to talk about an odd one. I think it's an odd one, but I think it's relevant. And, everything's a trade, right? Every decision that you make in life is an investment of some sort, either of time, money, effort, and it has some sort of return. Maybe it's monetary, maybe it's not. Everything's an investment. So, quite frankly, anything can go in this podcast if it's an investment. So we're going to talk about the gamblers out there who think that health insurance is a great investment because apparently the government does. But we're going to get into that. We're going to get into that one. May get a little bit of pushback on that, but that's all right. I'm going to give you my 2 cents worth. And then we'll talk about selling option premium, get into Jim's story, and just kind of end it with taking a look at Jim's track record and what Jim's doing, and let you guys know how you can get involved, which you absolutely should. I really like the way you have your signals broken down, Jim. $10,000 account, $25,000 account, $50,000 account, $100,000 account, and so different size traders can get involved in this. We're going to talk about that. Very impressive track record of a whopping 96% win rate over the course of I forget how many trades, Jim.
435.
435, and these are actual fills, guys. Jim is like us. We don't talk about hypotheticals. We only discuss actuals, and these are actual fills that Jim has taken in his account, and he's provided signals for. And so this is an actual track record. 400 and what? 35?
Correct.
435 trades with a 96% win rate, and stellar returns by anyone's standards. So we'll get into that probably during the second half of the podcast. In the meantime, Jim, any opinion you have goes. We want to hear Jim's take on everything.
No, you don't.
Yes, we do.
All right, so let's talk about the market, guys. Man, if we would have had the podcast at the end of last week, like on Thursday, we'd be like saying, yeah, see, we told you it's right in the middle of exactly what we thought. The market was going to move down, blah, 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 yak, yak, yak. And here we come into today, and we are a breath away. What do we get? In SPX, we got the 674.5.
Yep.
Like a 1.5 or 2 points away from all-time highs. Just like that.
Risk on.
Right. Friday morning, SPY was trading at 651 before the market opened, pre-market hours. And it went all the way to what did it get to today?
We have a high of 67.44.
And SPY 672, almost just under 673 is the high today in SPY. So we went from 651 to 674. That's what like a 3%, not quite 3% move to the upside, literally within a day and a half of trading.
Yep.
And that was after what I thought was going to be the start of at least maybe a week or two of a little bit of downward momentum. What do you guys make of it?
I wouldn't buy it.
I
wouldn't buy it, just
either.
not at all. It's overvalued here. It's my take on it. I would basically be in cash at this point. So
Oh, no bearish position for you.
no, I've found that the bearish over time for me it's almost hit or miss. It's like trying to catch that falling knife. I found that just hedging it in terms of hedging my positions, hedging on the bearish side is best. But right now, honestly, going long, and it is probably going to break new highs here. So if one was to take a long position or wanted to go bullish, you could look at attacking these highs here. But for me, I'm much more of a position type of trader on the long-term portfolio. So for me, I've already taken gains on most of this move up. So getting in at a small little retracement like this, I was wanting price to go down a little bit more before we could reload, but On a long-term basis, on a longer-term basis, at least going into 2026, I think we'll break the highs here into the holidays. And I think heading into next year, we may get a bit of back and forth and a bit of downside.
Mm. So apparently, Ben, you need to start attending my live trade calls because we've been killing it on bearish trades with the market going up.
Are those the OIs, right?
Yeah, the OIs.
Yes.
Yeah,
OI is a
yeah.
different animal, man.
And
It
how
is a
many
different
months have you
animal.
been doing bearish? Because I think it's at
I
least
started in
oh,
June.
June. Okay.
Yeah,
Yeah, it's been a while.
like we popped back up in April, and we went really fast, really high after the recover or after the drop in the early parts of April.
Yeah.
Made a almost a complete recovery within a month, and that's when I started. And then we could start moving into the month of June, which is not the most bullish. It's not necessarily bearish, but it's not the most bullish. And I just thought the recovery was a little too fast, too much, and so I started doing bearish at the beginning of June.
Mm-hmm.
And so since June, 18,000 800, or maybe I'm getting that mixed up. 18,000 something is what we've pulled out of the bearish trades since June.
Wow.
So
What's your lot size?
just one, just one.
Is it an
Wow.
SPX or
Yeah.
SPY?
Yeah.
Oh, SPX.
Yeah. I was gonna
SPX.
say it's gotta
I
be
was about to
SPX.
say if that's on
Yeah.
SPY.
No,
Oh, it's like I've been missing something.
Like,
no,
This is the
that
holy grail.
that number is based on a single lot size being traded on every single trade, and very little risk basically to the
what
upside
would
or
be
lower.
the
What's very
minimum? What
yeah.
would be the minimum margin somebody could do these trades with, Ryan?
Oh, well, so there's a couple of different ways to it. So a couple of the trades at the beginning of September, I was showing in the live trade sessions how you didn't have to go OI. You could actually do just like a regular credit spread. It's not as
Okay.
good, not as
Yep.
good.
Yep.
But the margin on it is like, $1,000, $2,000
So
for
do
that
the
one.
math. Return on
But
is pretty
but
well.
on option insanity, you're looking at about $30,000 to $40,000 in margin requirement. But
Mm.
still,
But
I
still,
mean,
It's still,
I
yeah.
mean, what is the math on that?
yeah, it's phenomenal.
Do the
But
math.
the only caveat I've found with those as well is if volatility is higher and you try to do these, obviously trying to buffer that spread, you have to go further out of the money. So it's going to widen that spread a bit. So I would say maybe, actually, honestly, I've seen some that are in the ballpark in the 20, like 20,000, 25,000, but I've seen some go as high as close to 50. Am I right in that?
Yeah, it really depends on. So this is with a margin hedge. So you got to
Right.
put that margin hedge on,
Right.
and it really depends on how far out you put the margin hedge. If you're
Right.
doing something like, um, well, no, it just depends on where you put that margin hedge.
Right. I mean, the closer you're out to the money to it, you're going to be paying more for that margin hedge. It's going to cost more,
Exactly.
but your
Exactly.
margin is going to be less.
Your margin's going to be less, but
The,
the
my
profit
point is, it's
potential on
very
these things.
attractive.
It is very attractive. It is very
However you
attractive.
cut it.
So my point, Ben, is that you're missing out, buddy.
Well, what I have, kind of actually similar to what we do in Tau. I'll have a nice big fat bearish on for a while. It'll give us a nice bankroll to work with. But for the most part, it's leaning bullish. So even if I am wrong, market tanks, we're able to take in and siphon out a good chunk of that credit. And either just stay on the sidelines or just fire off a cheap bullish to protect any risk
Yeah,
back up.
yeah.
But yeah, no, if it's something that is doable to most. I think most are going to have open ears to it. And OI is one of those programs. It's a different animal altogether, and it's fantastic. It's a really good program.
So what do you think the market's going to do, Chad?
You know, that's a great question. I respect and agree with pretty much a lot that Ben said. I know that's a weak response. I think that I mean, meaning I can't really add much more, but I think that Q3 earnings season was so strong with the standouts of the Magnificent Seven. obviously the Apples and the Microsofts, Nvidia, etc.
Still got a lot of earnings reports to come out too.
Yeah. And speaking of healthcare, we did have some weaknesses and challenges in that. I don't know if you're going to talk about that on the downside revisions, like post AbbVie and some stuff. But I think I think my outlook is another through the year end, another 2 or 3%. I'm just totally speculating. I think where we're at year over year, 7.5. So, I mean, I'm still leading a little bit risk on. I'm personally not fully in cash. Our portfolio is hedged though, so I'm not fully call it full risk on, but I'm still bullish into year end.
Jim, what do you think?
I read a weekend update every week, and I've said many times that I'm not a guru and I don't prognosticate. I don't suggest what way the market's going, but I acknowledge that we all have a bias,
Yep.
and and I've tried to fight that bias because a bias does influence. So, suffice it to say that for the last 4 years, I've had a bias that the market's going to go down.
4 years you've had a buy.
Yeah. Yeah.
It's not worked out very well for that. So I'm glad that I don't trade based on my bias, but I tend to be a little bit bearish. So
Yeah. Well, I was going to say, if I'm bullish, you should probably be bearish because I'm wrong more than I am right, guaranteed.
Yeah.
Welcome to everybody's world. So the only one that's an exception on that is Spring, who is right all the time, right, Spring?
Yes.
Absolutely. I'm glad you
Yeah.
finally accepted that.
Yeah, except
Except for
you said-
last week. I know you were right, but fair
I
to
was kind of
fair,
right.
you're not
This-
right usually.
this-
So this is just statistics, basic statistics that I'm basing my answers off of.
Yeah.
Anybody ever watch The Big Short?
Yeah.
Yeah.
Was he
Yeah.
right or
Been a-
wrong?
Wait, what?
I don't remember.
The Big Short?
Oh yeah. What about it?
Yeah.
He
Yeah,
was
was he right or wrong?
right.
Oh
Good.
yeah.
The guy that predicted it?
think.
Oh,
Right.
Yeah. Yeah, he was right. What? He was ultimately right, but he was wrong for a long time.
Mhm.
At some point, you're gonna get it right.
valid because that is totally
Right?
going to be you.
And so, when I say, hey, the market's moving up, we're going into June, July, August, and yeah. I've been wrong for about 3 months, but yeah, what I like about what we do
Yeah.
is that we, like Jim said, we don't trade according to our bias. And so every time I put on a bearish trade, I'm putting myself in a position where, yeah, I guess you can say I'm trading according to my bias, except for the fact that I have a scenario where I could actually still make money if the market moves up, and did many, many times. But I tell you what, this market action right now, I am not buying it. I'm not buying it
There he
one
is.
iota. Am
There he
I?
is. Ryan, great minds think alike. Have you noticed that?
Well, that's why it's called the Ben and Ryan podcast.
That's right.
That's right.
It was a good
Speaking
little
of, what were you
word.
guys both right on? Hey, Ryan, you mentioned you and
We
Ben
both
were
called-
right on
we-
something. What was
We
that?
both called a drop before the end of the month,
Oh, okay.
and
know why it
all
dropped?
right.
Do you know why it dropped? But by the way,
Oh, do tell us.
it had to do with a foreign country and tariffs. Am I right in that? Wasn't that the China tariff threat
So let me tell you.
that Donnie threw out?
Let me tell you something. Back in 1992,
Yeah.
I was watching, like, CNBC was like almost brand new.
Yeah.
And I was watching a CNBC show where you had two guys with PhDs in economics
Yeah.
that were battling it out about
Yeah.
which direction bonds were going and why the stock market was up the previous year and this and that. And they both disagreed. They disagreed. They have no clue. So when
Right.
somebody says, why it went down, I'm going to say, well, we can make some guesses, but Why? Really? Why? Maybe, maybe not. I don't know. But I can it was all day on the 10th. It
Yeah.
was down all day. This is not what I was calling for, though.
Yeah.
Yeah, I was calling for the market to move down, but once it moved down, for it to pop back up the way it has
Right.
and be, right under, that's not at all. This is not what I was looking for, and I still think there's more to come. And
I
by the way,
agree.
we gapped open this morning, so
And we did.
expect that to close here in the next few days.
Right.
That's my prediction. Um, so I keep pushing it because I'm bullish. I'm ultimately bullish. I think the tariffs are bullish. I've said that from the day that he was elected. I said, "You watch," and this is what I was right on, Spring. So you just, I said there are going to be issues when he comes on board because there's a lot of unknowns. And I said, you're probably going to see a drop after he takes office because of all of this stuff that's unknown, and the market's not going to like it. But once it makes that drop, it's going to be bulls over. I mean, it's just going to be bullish. And it was a little later in the year that the drop came, which was beginning of April. But since then, it's been nonstop bullish. In fact, it's been more bullish than I thought it was going to be after that
Yeah.
drop. So I am still very bullish, but this is
Yeah.
just there's got to be some breathing going on here somewhere.
Yeah.
So hopefully hopefully we'll get that because of my bearish trades pop in there, and then away we go. All right. Well, I guess we lost Spring. I guess she was offended that I was right.
So have we
But
got Ryan? I was gonna. You brought up something the other day, and I hadn't not really thought about this. Are we in our 6th or 7th month in a row of a positive month, and is that a record?
no, that's not a record.
We've had more than 7 months in a row where the market's been.
I'm
I'm sure we.
almost for certain.
I'd say we have. I just don't recall when.
Yeah,
You
so
know?
I remember. I
Clue?
mean, this has been back a while, but I remember when I'm in some of these trades, some of
Yeah.
these bearish trades, that the market's going up, 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 and I'm like, okay, we've gone up 10 days in a row.
Yeah.
Surely we're gonna pop down here, and I'm telling you that thing continued going up for like another 5 to 7 days.
Yeah.
So these, I'd have to look at I'd have to type it into TradeHound
Yeah.
and see what that is. But what do y'all think about? I mean, so what I don't understand, I guess, is the fact that we've got this government shutdown going on.
Mhm.
It's this one is now the longest in history, is it not? Am I right
I
in
don't
that?
know. I don't know. I'd have to
I think they were
Google it or
throwing.
AI it or something.
Yeah, I think they were throwing around. I don't know what the exact number of days, but it's definitely challenging it. So I don't know if it's officially the longest, but it's definitely
Mhm.
challenging it.
Mhm.
Yeah.
Mhm.
And it's like the market doesn't care.
Right.
Does that seem reasonable?
This is an interesting topic. And it almost wears me out. And I'm like, is this thing a fad? And I've been thinking this for a while. It'd be interesting you guys' thoughts, but this AI revolution and all companies and things are really devoting time and energy. Is that, am I wrong? And I've heard some theses and opinions on it that the market's forward looking, or obviously price is forward looking. I think
Right.
y'all would agree. And is that a main driver? I don't know. I've heard some interesting arguments for it. And then
I
I've heard
mean,
some people that think it's fugazi, as they say in
so
Italian.
yeah, so the question is that what's overriding any kind of uncertainty that might be associated with this government shutdown? And
I don't know.
because it just doesn't make sense that
Mhm.
we're going on the longest one. They're talking about all sorts of, I mean, I don't know. Maybe the market says, you know what? We're not spending money. It's all good. Right?
Yeah.
So it might be something, as simple as that.
Well, they are still actually. I find it's funny you mentioned that because I was wondering what's going to come of the releases, the news releases, right? Because they've put off
Right.
and they're still releasing the CPI data on Friday.
See,
That's a
that's
good
that's
point,
what I
Ben.
saw. I
Yeah.
saw that they were still delaying
Yep.
all the reports on Thursday, the unemployment reports. And I mean, we are getting estimates. I don't know how accurate those estimates are.
Is it going to be Friday? It's going to be an estimate. It's not an actual release.
See, I don't know.
Yeah, I don't know either. I don't know.
And so from my preliminary search on that is that they are releasing the actual numbers on Friday for CPI. But if that's the case, why can't they release the actual numbers for the unemployment reports on Thursday? Because those are stacking up now.
Well, they
Yeah.
have they lean that and the core PCE, the Fed's as they call it. It's popular name for the Fed's favorite inflation gauge, right? I'm sure
Yeah.
they'll probably do something similar to the core PCE, which is due at the end of the month.
Yeah.
But the CPI data is definitely one that's important. I'm assuming that's why they're releasing that, and I guess cherry picking which which releases to do because
Yeah.
they carry a little bit more importance to the Fed and to the overall market sentiment.
I don't know.
But
It's
yeah,
all I know is that I'm playing the bearish, and we're gonna see. We'll
I
see.
can respect that, dude. I mean, I can.
I mean, all I need is one day down. That's it,
Yeah.
and I'm good. I'm, golden goose type scenario. So, but I tell you what, these things make me wait until like the last stinking minute. Like I was in a trade last Friday, and that wasn't the last day I could have been in the trade, but it was the second to the last day that I could have been in the trade. And if it had not gone down, I would have had to roll. I probably would have taken a small loss, but I would have had to roll again and sit on another one. But it's making me wait to the last minute, and I hate those. I like it when I'm right immediately when I get in the trade. So,
You too.
what drawdown? I don't need
right?
drawdowns.
One thing to let you all know, guys, and I did throw this into AI, so take it with a grain of salt. In regards to the initial jobless claims, I think that Ben was talking about,
Mhm.
there's going to be no release scheduled for Thursday.
So
So
they're not.
it says shutdown has paused routinely for this weekly data processing. So I'm not going to read the other sentences. And then in regards to the Friday, the CPI, they're going to release it, but it's going to be delayed. Originally due mid-October, postponed due to shutdown, but now set for October 24th after BLS recalled staff to finalize it. So to Ben's point,
Yeah, so they've got, I mean, they've already got that listed. The core inflation rate coming out in the morning on the 24th, right?
right.
Okay. Yeah.
It says the 24th, yes, releasing, delayed. Original due mid-October, postponed due to shutdown, but now set
Right.
for September 24th after BLS recalled staff to finalize it. Expecting focus on core CPI for Fed rate clues, economist forecast 0.2% month over month. This is the actual official number.
Yeah.
So economists are
Yeah.
forecasting positive month over month. So
Well, that's interesting. So we've got all these delays in
Yep.
the man. I tell you what, when they release everything, if those estimates were off by anything, I think we're going to see some pretty significant market volatility hit for a short period of time. And I can't imagine that. I mean, that might be what kind of drops the stocks a little bit before we can resume on this bullish move.
So this is interesting in regards to market impact. They're talking about that traders are eyeing that CPI on Friday for disinflation signals amid tariff fears. And they're saying that delayed jobs data adds uncertainty to the Fed's November number
Yeah.
meeting odds. So they're thinking like a 75%, or I guess we've already had a 75% cut priced in. I think that's what they're saying. So I don't know if you guys, I know this is Ben's jam, the CPI stuff. I don't know what to make of it.
Well, I follow a lot of volatility. Fundamentals are another big thing. Honestly, I really don't think rate cuts or even any stability in the rate is actually going to drive, unless there's anything surprising, Like if the Fed all of a sudden says, oh, we're going to cut, and they do a steep cut, 3 basis points, that's going to be a problem, believe it or not.
Yeah.
People would see it as a good thing on the rate side of it, but that signals a lot of uncertainty. So I don't see them doing that. It's just not, it just wouldn't be prudent. Although, if history is any indication, you can never be too sure about what's going to happen in the market. So
Yeah.
I think a lot is priced in, and just on a valuation perspective, it's just especially tech right now. It's just been screaming, and every dip is being bought. Every dip is bought, and that's not uncommon. But it's also not healthy for the long term. You need to have some bit of liquidity and stability put into the market, and at these price levels, I wouldn't be interested. But Ryan has it right, man. If you could put on a bearish neutral trade and ride it, man, that's
And
just the way
just
to
not
do it.
just not risk too much.
Just not
And
risk
you
too
just
much.
need one down day, Ryan. Is that what you
That's all I
said?
need. Just one down day during the trade and golden.
That sounds high odds to me.
Yeah, no, it is. Which is why we've been able to pull out over 18 grand over the last 3 months after being wrong again and again and again. So
Yeah. Cool.
well, so one thing, I'm not going to get into this a whole lot today because we really want to get to Jim's stuff. But I have an opinion on this healthcare stuff, which is a hot topic, and I'm not going to get political, but rather I want to kind of look at the numbers of health insurance, because that's what the big shtick is, if you will, on why this is not why we've not come out of this shutdown, is because one side is wanting certain healthcare stipulations, and the other side doesn't want to give it, and at least not based on a government opening. But healthcare is a huge, huge industry. Health insurance is a huge industry, and I'm going to make this statement, agree or disagree, but I think for like 90% of anyone under 50,
Okay.
health insurance is a complete waste of money. A
Bingo.
complete waste of money.
I agree.
And I've done
You've
the
got
numbers.
small tail risk. So yes, I agree.
Yeah, yeah. And I've done the numbers. And for people who, don't understand what health insurance is basically one of the biggest gambling businesses, legal gambling businesses in the world. And you say, well, what do you mean gambling? Well, if you look at the health insurance companies that the major ones, like Progressive or Aflac or whatever, their growth is phenomenal. Like you think tech stocks do really well. Health insurance companies have some of the craziest growth rates out there, especially since when? Anyone want to guess when things really started taking off for health insurance companies?
Obamacare.
Yeah, I was gonna say a little bit
Yeah.
before that, but Obama,
Yeah. So, and I wrote an article on this, and I think we're going to release it sometime this week. And we'll kind of dive into this article a little bit more because it's an investment. You're making 5, 6, 7, 800, sometimes $1,000 a month payment into this insurance that you can never get back unless something happens, right? And even then, they're going to fight you on it.
And there's a deductible.
And there's a
So you're still
deductible,
paying something
right?
anyways.
So
You get a
I
tax break for it? It's a joke. It's a joke.
So, when you pay money into these health insurance companies, what you're doing is you're gambling that money away, and the health insurance company is the house. And yeah, there are going to be times where people win big. I say win big, but at what cost, right? It's not really winning, because if you happen to tap into that health insurance, not good things are happening. But, outside of that, most of the time, if you simply put your money into an account and invest in one of the health insurance companies, or a couple of them, or 3 or 4 or 5, your money will actually grow to astronomical levels, or I shouldn't say will, has grown astronomically over the last 14, 15 years. So we'll look at that because it's such a big thing. Everybody thinks they need health. I think it would shock most people. I've never paid for health insurance. And I have 5 kids. You know, I'm relatively healthy. So I'm not I'm not really putting a whole lot at risk there. And there are other things that are, going on, but all that money was unnecessary for health insurance, and save myself. Now, I'm not recommending anybody not go out and get health insurance, whatever, I just want to give you the numbers. And so we'll talk about that next week. Ben already said it's a waste.
It is, absolutely. I agree.
Yeah.
I've been doing
Yeah.
this since I was 20. I've invested just actually it's a little bit less, about $400 a month. I just put it away and I just let it sit there. If I need it, if I have to go to the doctor, I got to do something, I
Exactly.
just take it out.
I
Exactly.
would argue that when having babies, it might be a solid investment because it pays to have baby, like the hospitals charge an unreal amount even with good insurance. So you're still paying, which I guess that's,
Yeah,
I don't
you're
know the
paying
difference
insurance
between
and
cash
you're paying.
pay versus insurance.
And
But
that's
my
another
thought
thing.
would be, okay, if you're going to have lots of babies, the hospital's very expensive if you birth in a hospital.
Yeah.
So you're going to want to have that covered. But I didn't think about until I was just talking about it, the cash pay versus insurance pay because deductibles are so high.
Yeah.
And,
We'll get
my
into that
wife had
next
a
week.
horrible motorcycle accident, and it was a 7-figure number. So, I mean, I get
And
it.
was that covered by the auto insurance?
Uh, the lady that hit her was 150 years old, and she shouldn't have been driving, or
Yeah.
300 year however old she
Yeah.
was, and she didn't have enough insurance, so that covered some of it, and then Stephanie's too. And then she was under the lady was way underinsured, but it was a we I can't remember the total number, but it would have been like $1 million or whatever.
Yeah. Yeah.
Like it was bad. It was
Yeah.
the Lord
So
above saved her life. I don't know if I've ever told you all that story, but
no, we'll have to hear it sometime.
yeah.
Yeah, so so there
But
are
that was a rare
yeah, but
1 in 100 million odds.
right, and there are ways to get around that, but we'll talk about that more later. But before we do that, I want to get Jim's perspective. Jim, what are you 94, 95 now? As an
96, the
older
same as his
gentleman,
track record.
I guess he's got his hearing aid in. Yeah. Okay.
as an older gentleman,
Yeah,
uh,
I'm 75 years old.
75.
That sounds awfully old to me, but I'm relatively healthy. So, but I read the documents you're referring to and are going to share it with all your viewers here. And I agree with a lot of that. In fact, I was reminiscing that one thing that you told me years ago was maybe health insurance for you have the same policy regarding health insurance for equipment that you buy, televisions and so. And you said that you never buy maintenance insurance for anything. And actually, I stopped buying it at that point, and you can see why. I mean, you save the money and things rarely break, and when they do,
Yep.
you just throw it away and buy another one.
Yep.
Saved a lot of money.
Yep. Yeah, we can get in. So, it works in all aspects. And we can get into all that. So that's great to hear your perspective on that. Which brings us to the next part of this, which is we go back years. How far back do we go, Jim?
Well, you can round it off and say the year 2000.
2000.
Yeah.
Now,
So
I was in Colorado Springs at the time, and you came and visited me at the office
no, actually,
with your
I
daughter.
found Well, yeah, yeah. I think it was my wife because, or sister. I don't remember. That's too long ago.
What? I don't
It was
You
a long
you
time
had
ago.
Well, now I'm
yeah.
confused.
You had a
That's
conference
how
in
long
Colorado
ago it was.
Springs.
Yes. Yeah. Yeah. We had
That's what I went to.
had a conference there. And you came by the office for something.
Okay.
I don't remember what it was, but I remember you being in the office. And so yeah, that was a long time ago. And I could have sworn it was yours. I could have sworn it was your daughter, but I could be,
Uh,
you know,
yeah. Well, I mean, it's possible. My daughter was born in, I think, 1974, so she would have been 25
yeah,
at that
yeah.
time. But yeah.
Well, at any case, it's been a long time that we have I won't say been acquainted. We met, I guess, at the conference in Colorado Springs, and I forget what year that was, but I am proud and glad to say that Jim was a client turned friend over the I don't know how many years we've been, I would say, friends, but it's been a while. And so glad to have you. Let's talk about what got you started down the road of your track record. For those that don't know, Jim, you provide a service where you provide signals that those signals come out what, once a week?
Yes.
Once a week. It's called extra dividends. It's focused on selling premium. And his track record, again, over the last 435 trades, 96% win rate. Now, some of those he did roll, and we'll talk a little bit about that rolling. But a 96% track record, actual fills, actual trades, going back to 2022, and that's phenomenal. And I saw somewhere on here, Jim, where the 2024 return, and maybe you can update us on where 2025 is, but the 2024 return on a $100,000 account was like at an astounding 23 or 24%. Is that right?
Yeah, and actually, I think that's right. I don't see that right in front of me either. But on $100,000 account on this current year, for the 9 months to date is 28%, and if you annualize that, it's at 37%.
Wow,
So it's a third
28% return on the year so far.
year to date. Yes,
Yeah,
on a
that
$100,000 account, and actually on a $10,000 account, it is 31%. So it's even a little bit more with a smaller account percentage
that's
wise.
it's absolutely phenomenal. Absolutely phenomenal. So what got you started? And I want to swing back around. We may have to have you on again, quite frankly, because it's just fascinating. But I want to swing back around at some point and discuss what was going on with your positions during March and April of this year, because you're up 28%. You probably were feeling some heat back then. We'll get to that. But let's first talk about what got you started into selling premium.
Well, first I would say that everything that I've learned about, so Spring and I have something in common here because everything she's learned about life, she learned from you, right? Well, I can't say that about life, but everything that I've learned about trading options, I've learned from you. So, kudos to you, Ryan. You helped me get off on the right foot a long time ago. Um, During the pandemic in the early stages, I had a stock portfolio, and that stock portfolio, thanks to your help, was pretty much 100% correlated to the S&P. So, guess how much that stock portfolio went down during the early days of the pandemic? Yeah, about 34%, which is what the S&P did. And so, at that time I thought, this is ridiculous. I've been trading, doing some of my own stuff for all these years, and now I see, overnight or in a few days, I've lost this amount of money, and so um, I I just got to be thinking about that, and I reminisced about a selling premium, selling put options, because um, I started doing that. And rather than going right out and buying the stock, I said, what if I sell a put 20% below the stock price? Then if I get assigned, I got a really good deal on the stock. So that's kind of where it started. And then what was happening is the market turned around and started going up, right? So I sold premium 20% under the stock, current price of the stock, and it never got assigned. But you know what? I was making money on that. So that's kind of where the whole thing developed. And I used a lot of the uh, metrics from what had learned in your classes before. And yeah, the winning percentage of, I'm going to correct you, it's actually 97% now.
97%.
Yeah,
My
out of the
bad.
435 trades, 420 of them were winning trades. And
Phenomenal.
so, yeah,
Phenomenal. So, so you sell only puts, right?
correct.
Okay.
Well, I sell only puts, and then we have to manage the position sometimes. So when the stock does drop, I need to manage the position, and sometimes I'll one of three things: I'll roll the stock, I'll roll the option. I mean, and or I'll take assignment and then sell calls against it, or
Okay.
just
So
close. If I've totally lost trust in the position, I'll just close it and take the loss.
yeah, yeah. So you go 20% out of the money, you're selling puts, and then if the market does happen to drop, um, then you're gonna roll it, assign it, maybe sell some calls against the assignment, et cetera, et cetera. So this goes right along the lines of, one thing about selling puts I've always said is that when you're selling a put, all you're doing is you're getting paid to try and buy the stock at a better price. That's all you're doing, right? So if I don't like the stock market where it's at, but I would like it if it dropped 5%, 8%, 7%, whatever, sell a put, get paid. If it drops, great, you're in from that level. If it doesn't drop, you got paid, right? So to me, it's a no-brainer. It's a no-brainer way. The only issue is that, if you're completely wrong and the stock that you're trading goes ballistic, you obviously aren't in. But I wouldn't have been in anyway because for whatever reason, I'm not going to buy a stock that's making all-time highs, and I'm kind of bearish like that myself as well. So for me, I think what you're doing is brilliant. It's right along the lines of, I don't want to say basic, but simple. It is simple.
Right.
It's simple
Simple. That is,
logic.
yeah.
Simple logic. You're making time work for you. You're making the market come down to the levels, and you're making it come down quite a bit. Now, what is the timing? How much time are you in a trade on average, would you say?
So that's a good segue to, because I wanted to jump back to one of the things that you said too. A couple of the unusual trades have lasted a little bit longer. I want to tell you about, you, you said something that the reason you sell a put is because you want to buy the stock for a less price, right?
But selling a put is trying to buy a stock at a better price, getting paid to
Yeah,
buy the stock at a better price.
yeah.
That's what it
And
is.
yeah, in our case and in this strategy, I'm really not wanting to buy stock. We're just trying to we
Right.
just want to make a profit on it. So take, for example, a recent position in Wolf, WOLF. I originally sold a put for 1750 in August of 24. So it's
What
a little
ticker?
over a
Wait,
year
wait a minute.
ago.
What ticker was that?
WOLF, Wolf.
WOLF.
Yeah. So sold a put
Uh,
at 1750 and they went bankrupt
oh,
last month. That's
why I don't see them.
That's right. That's right. It's
You
now
could have
called
let out
Wolf
with that.
One.
Could
All
have let
right.
out with that.
I rolled and I rolled and I rolled. I ended up closing that stock, closing the position when that stock was selling at $1.50. So from 17.50 to $1.50, and the overall position it made $193. The annualized return wasn't that great, but who else bought the stock for 17.50 and made profit on it when it went to 150?
That's what I'm
Okay,
talking about. That's
yeah.
what I'm talking about.
So a little bit more normal would be Warby, WRBY, and that one I originally got into when it was trading 22.50, and that was in 22. Oh, drop my ear. There we go.
So this is a new issue in 2021.
So yeah, okay,
Yeah.
I
Yeah.
forgot that.
Yep.
But that stock I got out of it. So the original put was 22.50. It went down. I closed out at 17.50 with a $212 profit. So, you know, when you say the strategy makes money if the stock goes up, if it stays the same or it goes down, I've got several examples of it going down. Now, your question was how long are we typically in a stock? Well, those, you know, were 2 and 3 years. I just wrote up in my last newsletter, so the subscribers already know this, but the title of the newsletter was 2 Week Wonder. So last week, I closed out a position that I opened on September 29, sold it on November, or bought it back on November 21, and that was ARQQ, 22.50,
Yep.
and they bought it back for $15. Sold it for 65. Sorry, bought it back for 15. So, I'm making a mistake here. Sold the put for $80. Bought it back for 15. In 2 weeks, we made $65 on one position in that one stock. And I got out of it. Didn't expire till November 21, but I got out of it and I got back in it this Monday, yesterday.
So you're back in that was A
No,
B.
Monday's today.
Oh, today.
Yeah,
That was ARQQ. Is that what you said?
correct.
Yeah. And so that's trading at 39. So give us an example. Or you're in the 22.50 puts? Is that what you said?
Yes.
So if you pull up a chart,
Look,
go ahead.
well, today, oh, I forget which one I got filled into. Oh, I got filled in Fluence Energy today. FLNC, a $13 put, and I don't know what it's trading at right now.
Oh, that's funny. Which brings up something. FLNC is trading at 1850. Actually 1845. And let's see, today it's actually up today, which brings, is that up today? FLNC?
FLN is in Nancy.
Okay, yeah. So it's actually up today. You got filled
Yeah.
this morning. So you were filled this morning?
Yes.
So the market gapped open at 1980 this morning. It's been coming down ever since. It's like 1850 now, which is still above Friday's close. So you were filled on this put when the market was up.
Right.
Yeah. All right. So I got a story for you. And I don't know how many people know this story or not, but do y'all remember GameStop and the whole meme crowd with GameStop?
Yep. I remember what you did.
You know, a bunch of people get on Reddit and they're like, I call them Redditiots. I know I'm being mean, but
Yeah. You're
but they
gonna
start
insult a lot
talking
of people
about
watching.
how they're gonna, take the stock up and all these people are getting into this stock at like $300, $350. Oh, it's going to the moon, blah, 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 and they're short squeezing. I don't want to get into all the details about what a short squeeze is and what exactly happened. Maybe we'll focus on that a little bit more. But one thing that I did is, as the market was trading at $350 a share, okay, $350 a share, I was selling $1 puts for 18 cents. Now, process that for a minute. And not hypothetical. These are actual trades. Market was trading at 350, and I trade 18 cent. I sell $1 puts for 18 cents. And they expire in like 6 weeks. So we're talking about making more than 18, 22% on risk, which is, if you're selling it for 18, I have $82 of risk. And that has to go to zero for me to suffer that $82 risk, right? So I'm making 22%, but I'm going to make that 22% in 6 weeks or less. And I think I made it in, I think, like you said, Jim, is I got out early because as the market was coming back down, they were popping the premium out. It was no longer at 18 cents. I think a week later it was trading down like $100, and I pulled out for like 3 cents or 4 cents, something ridiculous like that. And I think that goes to show, what people do not take into account when they are looking at selling premium. And that is that if volatility goes up in these stocks like that, I don't care where it is, you're going to see some really fabulous put selling opportunities that are mind-boggling. What I should have done is I should have sold my house. I should have sold Spring's house. I should have sold all my other kids' house. I should have cashed in all retirement. I should have sold my business and put it
No.
all in selling $1 GameStop stock, or puts, I should say. But I see that's kind of what must have happened here. You probably had an earnings report come out. Did you? Do you know, on FLNC?
No.
So it just opened higher, significantly higher. They popped the
Yeah.
volatility up. You got filled on your put, and now that's coming down. You're probably taking a little bit of a open position loss on that put right now, but I bet it's not much.
Um,
Let me see here.
yeah, well, see, I sold that for, I got $60 on that. So,
That's
I
crazy.
usually look for 2% of the strike price, which would have been $26. But we got $60 for that one.
Yeah. And that's the other part of this equation. So you're going 20% out, and then you're requiring a certain percentage of premium to bring in, right?
Right, right.
So you say it's 2%.
Yeah.
What's your average? That's your minimum, but what's your average that you're bringing in?
Um,
You say 3%, 4%?
yeah, well, between 2% and 5%. Between 2% and 4%.
Okay. So that's pretty good. So and you're going out how much in time? About a month?
Yeah, 45 days,
So
1 to 2 months. And I've gone out as far as 90 days.
okay.
I,
So
I I strictly avoid earnings, and so during earnings season, it can get to be difficult to find them because the number,
mm.
the pool is pretty small. So sometimes I have to go out further
So have you ever oh, you mean go out further as far as a
in time.
percentage? Oh, in time. Have you ever
Yeah,
thought about going just further out on an earnings trade further out of the money as opposed to just 20%?
yeah,
Yeah.
yeah. And the way the market is right now, I mean, the premiums are higher, and so I'll do both. I'll sometimes go closer to the money or up further out too.
Yeah. So okay, so you got filled on FLNC 11/21 expiration, $12
Yeah,
put, did you say?
13.
$13 put. All right, so we were in a $13 put. You got filled at 65 cents this morning. The market's down. Guess where that's at right now? 55 cents.
Okay.
Yeah, so the market
Yeah,
actually is coming down toward your strike, and you're making
making
money
money.
on the
Yeah.
position. That's what I think a lot of people don't realize just how much value there is in selling puts when they have high premium. Some of the things that you won't touch, like earnings, I will absolutely touch. Um, some of the stocks that are like going through bankruptcy, people won't touch with a 10-foot pole. Give them to me, baby. I am absolutely going to play stocks that are in danger of going bankrupt. You know, during the pandemic, American Airlines was trading, I don't know, somewhere around 12, $13. And there's a site, and I forget what it's at. I haven't been on it in a while, but there was a site that tracks the probability of a company going bankrupt over the next, 12 months or 24 months or something like that. And they actually had probabilities for that. And the probability of American Airlines going bankrupt during the pandemic was at like 65%. And so once again, AA is trading at actually it's not AA, it's AAL. It's trading at like $12, and I'm selling $1 puts again because of bankruptcy. Hertz car rental. How many times has that been going in and out of bankruptcy lately? And so it was actually in bankruptcy, trading for $1.50 a share, and I'm selling those things for like, weekly puts for like 20, 25 cents. All I got to do is sell it 4 times during bankruptcy proceedings, and I make back the cost of the stock. It's insane. So I don't shy away from those. Obviously, I think you should have a little bit more experience before you just jump into that kind of stuff. Earnings trades, you can
Well,
get
that's
some big moves on earnings
that's part
trades.
of your cash cow strategy, right? And most of the time, if you're going to look at bankruptcy, it's got to be a stock that's less expensive.
Yes. But cash cow's not really a bankruptcy type. Um, that's there are going to be some opportunities in there that are like that, but that's not really a bankruptcy type strategy. It's more of a um, high reward or high premium on cheap stocks strategy.
Yeah.
And then it rotates, in and out. But we have, scans for that, and it's a little bit different. And it's not necessarily going out of the money either. We're going at the money, or maybe slightly in the money, even, depending on how much value we're able to bring in. So, a lot of different ways to do it. You have clearly mastered, um, your approach on how you take advantage of the opportunities that these provide. So, with that kind of track record, who is it that you think would be most benefited from, a service like yours?
Well, interestingly enough, just prior to getting on this podcast today, I got a phone call from a, client that you probably know because we share a lot of the same clients because of various reasons. But he said to me, he said, I have dropped all of the other programs that I had, and am trading just this. And he mentioned two things: the simplicity of it. He says, it's simple, and um, I don't have to sit in front of my computer and watch and wait for something. He says I can just set it there, and he's had so much success with it. So um, I have a lot of retired folks that are a part of the program, and maybe I track them because I'm one of them. And honestly, it's one of the reasons why I love doing this program and this service is I get to talk to people all over the world,
Yeah.
and
Yep.
it's great to do that. So
Very good. So simplicity. Now we're going to talk about the hard part. And I think we're probably going to have you on again at some point because we really need to get into this track record a little bit more. But let's talk about the hard part.
what's that?
What happens when your clients are going through a market crash? Stocks drop 50% tomorrow. What happens?
Head for the hills.
Head.
So,
Sell more.
we have had times, even though we've been in largely a bull market, there have been times that, even this past year where
Yeah.
we're not there. And as I have pointed out to clients, having lived through the pandemic where my portfolio lost 34%, I'm starting out. So you don't have to trade this. You can just go ahead and buy stocks because that's what people do.
Yeah.
Well, isn't that wonderful? I'm starting out 20% ahead of the game. So if I'm assigned at 20% under the price of the stock on average. And a lot of times it's more than that. And it
Yeah.
wasn't that way in the beginning. I'd go 10% under, but now I'm pretty much stuck on 20%. So yeah, the market can crash, but we're in a lot better shape than those that are just owning stock.
Mm.
So you have a head start. So if the market's down 50%, you're, let's say, average on your positions 20% below the market, and the positions that you're in, let's say they just go. So while everybody else is down 50%, you might only be down 30%.
Yeah.
Okay. All right. So one thing that we go ahead.
Well, I was just going to say, and then what do? You're going to depend somewhat on history that the market always comes back. You just don't know when. And we'll sell calls and write it back.
Yeah. In our lifetimes, it's come back. Well, except for, I mean, Jim, I guess you were alive back there in the Great Depression, but
No.
Cruel.
It took a long time for the market to get back after the Great Depression, like
Yeah.
2 decades.
Yeah.
It was insane. So we haven't ever experienced anything like that. 70s, it was, with the inflation and whatnot, it was stagnant for a long time, back and forth, and so there wasn't really a lot of bullishness going on in the 70s. And so the majority, it's been the 80s, 90s, the aughts, teens, and 20s. And that's a long time for the market to be going up with a few crashes here and there that didn't last very long. So have you looked at hedging on a position basis, hedging on a portfolio basis, or anything along those lines?
Well, certainly on a position basis, I think to turn some of these naked puts into yeah, buy a put against it and make it into a defined risk trade makes a lot of sense. And I have some of my clients that would like to see me do that. And I've looked at that, and it would just take more time. And I've talked to you about it before, and you've
Yeah,
encouraged me
yeah,
to look at doing that. It could be another strategy, but just bluntly honest, I'm 75 years old, and I don't know if I want to come up with another strategy or do something that's different. When this has worked so well.
yeah, yeah. So how much do you have? So on $100,000 account, how much is exposed at any given time?
So the people that my subscribers, I explain to them that the absolute risk on any trade is the price of the stock times the number of contracts times 100, right?
Yep.
And less the price that you get for the premium. A more realistic actual risk to consider losing would be 50% of its value, since the chances of all stock going to zero are, practically non-existent. So
And
that's
if
the
they do,
number
we've got
that,
much bigger problems on our hand.
yes,
Yeah.
indeed. Well, that's the number I use, 50%. And I say to, to others, depends on your risk tolerance. If you want to go bigger at 100%, then you can. So the spreadsheet that you've seen and that I share with subscribers is based on the stock price going to 50% of its value.
Okay,
Did that
so
answer your question?
yeah, absolutely. So you have a little bit of leverage going on, is what I am taking away from that. And so if you have let's see, how many positions do you have on right now? I'm trying to find that, and I just
So my goal is to have 20 positions on.
Okay.
And so sometimes we have a few more and sometimes a few less. We're right at about 20 now.
okay. So let me see here. Is that on the open positions orders, current
Yes.
positions? All right.
Yeah. Way at the bottom. Yeah.
16 and 5. So there's 11, and then you have on 6 open or 6 new orders.
6 new orders, 2 of which were filled today. And then on the next tab that you see is open position and assignments. There's still 4 positions that are open there.
Okay, perfect. All right, excellent. So digging down into this just a little bit, if I have $100,000 account, how much in margin is being used?
I don't know that.
Okay. I think that's something that we'll dive down into a little bit more on the details, maybe in a future podcast, where we can kind of go into the nitty gritty a little bit more for those that are interested and go a little bit more granular and kind of pick this thing apart with a magnifying glass. Hmm?
Yep. That'd be great.
Yeah. So what do you guys think? What y'all have heard about so far?
Sounds
Regarding-
cool. I would just want to understand the risk more. Like you drill down into that, but that's all I would want to know.
Yeah.
I actually do have a question because Ryan, you do hedging stuff all the time.
Mhm.
Would that pair well with his selling premium or selling put?
Oh, absolutely.
You would.
The issue that you're going to have is, what does your stock portfolio, what does your portfolio look like? Is it more like the S&P? Is it more like the IWM, like the Russell 2000? Is it more like, the Qs? And, that I think that's probably going to change. So there's probably a little bit of work that would need to go into that to kind of analyze the portfolio. But there's no way I would sell premium like this on a large account without having some sort of hedge going on. And that's just me. Because you're 20% out of the money. I don't think the market's going to crash. Don't get me wrong. I don't think that even on the next down move, I don't think it's going to be anywhere close to it. If we hit 5%, I'll be happy. If we hit 5%. But on an individual basis, you might be able to do a little bit more, just to cap the risk a little bit on a massive move. But the problem is that where you're going to cap the risk, it's you're going to buy like Jim was saying, you're going to buy a put, you're going to cap that risk, but by the time you buy the put, because it's so far out of the money, the chances of the market going there and actually putting that put into work is like 0.1%. Maybe not even that. I mean, he's at 435 trades. And how many times have you seen the market go down like 50% on an open position? A few times.
Yeah.
Right?
Yeah. It's
Yeah.
happened. Yeah.
Yeah. So it happens, but is buying another put on every single position worth it? And I don't know. I don't know that it is, quite frankly.
I see.
It may not be worth it, but there's another thing that I've toyed with, and occasionally I'll put out like a bonus trade that doesn't really fit the positions here. But by doing a defined risk trade, um, and not being in a cash position, you can take more positions. And so there you get into the compounding. And
Yeah.
so, whereas you might only be able to afford to take two FLNC, if we could cover that, you might take four.
Yeah, so like on FLNC, it's going for you sold it for 65 this morning.
Actually, it was $60.
$60 this morning.
Yeah.
Okay. So I would have to buy, so that's a 13 put. And what I'm looking at right now is I would have to buy like a $7 put. Right. And I could buy that for like 2 cents. And that would then cap my risk. Instead of risking $1,240, I'm risking basically 540. Right. And it could go to zero. But what's the chance of this market going down to, well, man, I look in the chart and it's actually not that bad. We were at
So,
$7 a month ago.
right. So in that particular one, that would be a good thing to do.
Yeah. Yeah.
Yeah.
And it's looking like you can get like 2 cents on this. So I'm just going to try and do it right now just to see if I can get filled on the spread itself. 52. Let's see here. All right.
Spring, is he actually a subscriber though?
Yeah, yeah, he receives your trade shares.
Okay, good.
Jim, how far out are you selling? Like,
I was filled at 52.
cool.
Okay.
Like,
For
are you far? Like, are you selling a certain percentage out of the money, or looking for a certain delta or something like that?
20% out of the money.
20%. Okay.
20% out of the money.
Cool.
And so yeah, so let me see, give you the details on this fill here. So I was filled at 55 on the 13 put, and I bought the 7 put for 3 cents. That's my hedge. So where are you going to get out of this position?
So for the most part, I put an order in at a nickel.
A nickel.
Buy
Okay.
back at a nickel. There are a few things that can change that, but
Yeah.
that's probably 90% of them.
So you're just waiting for the, almost the full premium to come in, and that's that.
Yeah, but time wise, like I told you, ARQQ, we were only in that one for 2 weeks, and we were still a month away from expiration.
Yeah.
But
Yeah.
I look, so I review them once a week, and if there's a reason to take the profits early, we do it.
Okay. So on the one that I just put on, risking about $550, I'm going to make 10% in 4 weeks or less. 10% in 4 weeks or less. So that comes to about an annualized return of 122% on just that one trade. So that's pretty good. If you don't have the put, if you don't have the long put, then it's going to be a little bit different because you're looking at, for you, it'd be $55. Let's see. So it'd be a 4% return, and that annualizes out to just over 50%. So the extra put does help on the, on the numbers as far as that's concerned. And it definitely would help on the ability to, increase trade size. The thing you've got to be careful of, though, is that if I'm in a hedge and you're not, all right, which is the case right now, I'm in a hedge and you're not, and the market moves down to $7, we both make the same thing or lose the same thing. right? So you're not actually capping your risk until the market moves down to whatever the long put is.
Yeah.
And the probability of moving beyond that is what we have to kind of analyze and say, okay, is it worth it? Because if I now do two, right, I have half the risk that you have, actually a little less than half the risk that you have. But if I do two lots on that, then I'm going to have the same risk that you have, only the market only has to go down half the price for me to get the full risk. So it's not as simple as just saying, okay, I'm going to put a hedge on and therefore I'm going to increase my, the trade size. So there's a little bit more that goes into it that should be considered, because I think a lot of people will think, okay, well, I'm now hedged. I only have $500 risk. I had $1,200 before, so why don't I just do two? And the answer is because you now need half the market move to realize your full loss as opposed to a full market move. And so the dynamics do change a bit. And I just want to caution people on that, to not get too crazy about putting on a hedge and then putting on a bunch of more contracts because they can afford it.
Yeah.
You may or may not be able to. So
Yeah.
we'll probably have to address that in a compounding session. Be a good example for that. Well, we are way past time. But all good stuff. And clearly we didn't get to cover all of it, so we'll have to come back and at some point and revisit this and go from there. If you're up to it, Jim.
Absolutely.
Oh,
Thank you.
perfect.
Thanks for inviting me and
Perfect.
for giving me this opportunity.
All right. One last announcement on TradeHound. And by the way, if you guys are interested in Jim's subscription service, contact our support. We'll get you the link. And he will get you going on that. He does all his own support, so feel free to call him and bug him.
All hours of the night.
Like, this is elite level
Just kidding.
customer
Just
support.
Just kidding. Don't bug him too much, guys.
Jim at extradividends.com.
Jim at Extra Dividends, and that's XTRA.
Yeah.
Not EX. It's just XTRA dividends.com. All right, perfect.
Yeah.
All right, guys, anything else? Oh, TradeHound announcement. Next Monday, we're releasing the beta version of TradeHound. You can only get access to that if you are a lifetime member of TradeHound. So if you have not gotten on board with that, you want to get on board, the beta release is coming up on the 27th. All right, looking forward to that. Y'all got anything else we need to cover?
We'll cover it on the next call.
On
Ben is done.
yeah. On
we got a lot. We got a lot of info on this podcast today.
On Ben, Ryan, Jim, Chad, and Springs podcast. That's the new name, right?
So creative. Good job.
No, that doesn't work, man.
Yeah, it doesn't work. All right, guys, we're signing out. Appreciate your attending. Hit subscribe if you've not subscribed. Right, guys.
Yeah.
And hit subscribe and and only leave nice comments. Okay.
No, I like the entertaining ones.
If you don't like it, hit dislike twice. That's the
There you go. There you go.
That's good.
All right, guys. We'll see you on the next one. Thank you, Jim, for being with us.
See ya.
Thank you.
Thanks again, Jim.
Take care, guys.
Bye-bye.